All right, hey traders, TG Watkins here. It is April 21st. I'm recording this on Thursday. You guys are going to be seeing it on Friday. And if you have any questions about who I am, if you want to look up anything more about me, the services that I offer, if you like how I trade and talk about the markets, come over here to profitpilot.com and you can then come over here, check out services, and that's where you can find more information. All right, so if we take a look at this with the market in general, we had a heck of a sell-off today. Pretty amazing that the markets gapped up and just went literally straight down. Just incredible, straight down after this. Now, maybe one thing I can show you through here, let me just show you a Thinkorswim tool here that I use. This is the advanced decliners on the bottom. So this is the number, let's see, yeah, the number of stocks going up versus the number of stocks going down. And what I want to show you is, so today is Thursday. So Wednesday and Thursday, you can see that they opened up and then you can see they kind of went straight down after that and then went sideways. And then today they opened up again and promptly went down after that. And this was absolutely incredible. Like, wow, look at that. The number of stocks that were in positive territory and then ended horrendously negative. Unbelievable. Very, very, very strong stuff to be seen out there. The other side of it is if we look up here at the top side, this is the order flow. This is a positive buying volume versus selling volume. Yeah, we had a fairly strong day on Tuesday. Wednesday was a whole lot of not much, and then even Thursday today that I'm recording this, you can see it started out really kind of just meh, and then it just careened down like that. So really, really strong internals to the downside about this. And I'm going to get into it a little bit more about Tesla, because I think, we saw Netflix initially, they got creamed. And then Tesla, even though Tesla had a good report, the charts just weren't ready. And so we'll go through that and I'll show you how I see that and how we saw that coming. Now, based on the teaser yesterday that we posted and I talked about, I said, look, guys, we talked about Pfizer, PFE, and I said, if we take this and relate it to the market itself, this thing is not ready. The market is just not going to be ready to go up. And what I was really talking about was the inverse trampoline move. And the inverse trampoline move is either a false long, meaning don't get suckered into a long trade. It's not a bullish trade. And I said, otherwise, if it's a correct situation, then it's a bearish trade. It's a short trade. And number one, what I started yesterday with was that we had the Moxie price trigger here on the weekly chart trigger. So that means that momentum is now negative on the weekly time frame. That's really big. That's important. And something on the higher time frame to be paying attention to. And then on the daily chart, not only did we have this first run that got over the 50 while the Moxie indicator was below zero. And I said, hey, that tells me that price is at least going to pull back to the daily 50, which it did. And then we need to kind of decide about that. And I said, you know what, it can bounce. That's fine. I'm okay with the bounce. But eventually it's going to roll over again because it's still in an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. And then what gave me even more conviction about the weakness with this market, and I talked about it yesterday before this move even happened, is here I said, hey, we have yet another inverse trampoline move on the hourly time frame. Price should not be over the 50 if the Moxie indicator is below zero. And so that gave me the confidence to basically stay on some of our shorts and to not get long at all on any trades out there, seeing that this is something that was going to be happening. And so lo and behold, we got a massive sell-off today. So let me show you Pfizer, since I kind of just touched on it yesterday with you all, and let's kind of dive in through this thing. So just like the S&P, you can see here that price got over the daily 50, but the Moxie indicator was below zero. So again, false long, likely to pull back. And it did. You can see here it did pull back to the daily 50. And okay, it bounced here at the daily 50 and the hourly 200. And so be it. It's a smaller stock compared to the index. And so it can be a little bit more volatile and bounce a little bit further. But what you should know is that, hey, this move up here, like whatever it's going to do, you got to understand that the Moxie indicator is below zero, telling us that energy and momentum is still negative and that you need to be careful about anything to the long side because it's still not quite ready. And so that is how I view this, is that all of this was an inverse trampoline move with price being over the 50, but the Moxie indicator below 0, which tells us that this is a false long. And then you got that move up on the hourly. You can see, price higher. Look how much divergence there was on the Moxie indicator. Then you got the Moxie price trigger, and boom, there's your move to the downside. So I'm just using Pfizer as an example of a chart pattern and how some of these mechanisms work in relation to the Moxie indicator, so you guys can see that this tool and the way that I look at this and how I communicate this all for trading works regardless of the stock that you're looking at, and just that there are some similarities as far as chart patterns go. All right, then we head over to the NASDAQ. Let me do 3 Qs. And, let's see, QQQ. There we go. And kind of the same thing. You can see here on the daily chart that we had an inverse trampoline move. So price should not be over the 50 if the Moxie indicator is below 0. You could also see that price got rejected by the weekly 50, basically. And then also here on the hourly chart, you can see that price tried to go up across a downtrending moving average. So again, conflicting moving average directions. And you can see that price was over the 50, but the Moxie indicator was so far below 0, it just wasn't going to go. So that was another massive inverse trampoline move, which told us that you should not be looking long and that this thing was likely to continue down. And so that's what happened. That's what we saw. And then let's see, we can go over to IWM. Take a look at this one. Let's see. So what I was looking at is I figured that this was going to be a bit of a false move. Now, again, today it was a bigger move than I expected. I definitely was not expecting bullish or anything like that, but I wasn't expecting it to be just straight down like it was. But I was definitely not looking long on any of this. For those of you who are familiar with my pattern, we got the 50, 200, 50 maneuver, and you can see it just slid right through the 50. And the other situation that told me that this was likely to pull back and that I didn't want to go long is, again, we had price over the 50, but the Moxie indicator below 0. So not only was this a 50, 250 maneuver that didn't end up holding the 50, it was also an inverse trampoline move. And so really that all kind of worked out for us. So yeah, that's how the IWM went. And then with that, if we take a look at the VIX, try that again. Okay, so not that. We're going to use the UVXY. All right, so with the UVXY, the thing that I wanted to show was that we could look here at the weekly chart. And it's a little bit challenging because we have to really zoom in. I mean, it's, there you go, pretty tough to see because on the weekly chart, the UVXY really just, it almost never sets up on a weekly time frame. And then if we look here at the hourly, we kind of get that configured. And that's kind of the thing that I want to point out. So the UVXY is a perpetually declining product. So the fact that it is setting up on a weekly time frame is astonishing. But look, we basically have a double bottom on the weekly time frame. Very important to pay attention to. And then this is an elf shoe. This is an elf shoe. And if you don't know what I'm talking about as far as elf shoe goes, then that's where you come over to profitpilot.com. You check out the classes and you check out the trading room, the Moxie trading room that I have, and that way you guys can get up on my lingo here. But basically, double bottom situation that's working out, and then you could even see price lower, Moxie indicator higher. That's your positive divergence, and look what we got today. There's your Moxie price trigger. Look at that move that we had today. So really, really big stuff here on the UVXY, which is the leveraged ETF of volatility. And yeah, I think this thing's going to be a big mover. So we're going to be loading up pretty nicely on something like this. I've been talking about it for, gosh, the last 2 weeks probably, watching this move, getting ready for it, gearing up for it. And yeah, it's doing well for us. So very, very nice on that. And then if we come over here to Tesla, and what I want to show you actually is this screenshot. Let's see where I got this screenshot here that I took. And you can see from April 20th. So at the point I'm recording this is April 21st. So on April 20th, I was talking to a trader friend of mine. And you can see here, I was talking about the UVXY has a doji. So, he's like, I'll flip a coin. I was like, I think which way it's going to go. And then I said, hey, yeah, everyone's definitely waiting to see about Tesla earnings. He said, yep. And I said, looking at the Tesla chart, though, even if they gap up, the chart isn't set up to sustain it. And he agreed with me. He said, no, it's not. And so with that being said, totally calling this before the report today. I said, hey, this chart looks super weak. Nothing really looks good about this thing. And so even if they gap it up, which they did, this is not ready. You can see that the Moxie indicator, look at this, on the hourly chart, the Moxie indicator is just totally dead. It's below zero. It's not doing anything. There's no life to it. And so any moves over the 50 while the Moxie indicator is below zero like this is a false long. And so this was a fantastic short if you were looking for it, that a gap up into, again, over the third ATR, so outside of outer boundaries, and also here right into the previous high with the Moxie indicator below zero like this, it just wasn't going to happen. And so that's what I said yesterday before earnings actually took place. And sure enough, it popped up, gap down, and the market just took advantage of all this, and that it was just looking for a bit of a sign and a cue like that. And I really think that generally speaking, we're going to keep going lower. Tesla's going to go lower. Apple's going to go lower. I mean, you name it. Other than maybe the commodities, we're going lower. So if we look at one of the bigger names, even kind of like Amazon, what's going on with this? We got the daily and the hourly chart. Now, yet again, look at this. Another inverse trampoline move on the hourly chart. The price should not be over the 50 if the Moxie indicator is below zero. And even on the daily chart, we're getting a downtrending Moxie price trigger telling us that momentum has now gone negative. So sure, there can be bounces along the ways and all that kind of stuff, but all of this is kind of telling me that we should be continuing to look for weakness. And I've been telling people that for Amazon, if you're interested, I would not be surprised to see Amazon at least get to the weekly 200. It could go further, but I think that's a decent target to expect Amazon to go in the relative near future. So we'll have to see how long that takes and what path, but I do think it's going to be kind of heading that direction. We can also look at Google, see what it's doing. Now, Google kind of maybe had a little bit of support here. You can see that it's kind of got this layer, this level that's been going on. But if we look at the hourly chart, what's going on with it? Yet again, another inverse trampoline move. Price tried to bounce up into a downtrending hourly 50, but look how far the Moxie indicator was below zero. This was telling us that even if Google like bounced all the way up here someplace, the Moxie indicator had so far to go before it was ever going to get positive that it was telling us that price over the 50 is going to be a false move at some point. It's a bull trap because the Moxie indicator is telling us that, hey, energy and momentum is negative. Price just isn't going to go there. And same thing with here on the daily chart. You can see here the price got over the 50, but look at the Moxie indicator. It too on the daily time frame was below zero. So this move up here was a false long move, and at some point it was going to roll back over and keep going down, and it sure did so. And it confirmed that yet again recently with that hourly inverse trampoline move. Even on the weekly time frame, you can see that we've got the Moxie price trigger to the downside here too. So these big names are getting hit, and they're getting hit hard. Now, Apple, kind of, I think, the last bastion of hope for some of the bulls hiding out in this bigger company. I mean, they literally, I think it's just they're hiding out, trying to be the last ones that get shot. And that seems to be what's happening. You can see here, there's a double top right there. You can also see price over the 50, Moxie indicator below zero, so inverse trampoline move. And again, you can see here that price ran into the underside of a downtrending hourly 50. With the Moxie indicator below zero, that made sense that it was going to be firm to the downside. Well, if you happen to get a bigger bounce right here, this is how you make sure you don't get suckered into a long trend, an upside move, when really it's not a good long move. Yet again, another inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. And that's what happened. So that's what I've been telling my subscribers, that look, these are invalid long setups, and they might actually be short setups. So do be careful for what the kind of positions and setups that you're doing. Now, over in some of the commodity names, or at least we call it maybe news-based stuff and current event and all that kind of stuff, we look at CF. Now, some of the other, call it ag stocks, fertilizer stocks, they were a little bit more difficult to read because they just kept pushing, and the Moxie indicator did get over zero and all that kind of stuff. But what I like to do is I like to look at numerous tickers in a certain industry that are generally trending and trading together, moving together, so that I could see if maybe some of them give me a little bit of clue of what's going on. And CF was that name. CF told me that what we could first see is price moving up, Moxie indicator moving down. That's negative divergence. That's something that you need to be paying attention to if you use the Moxie indicator as a tool. The other thing to be noticing is even though price here over the last few days, couple weeks, maybe 2 weeks, price did keep moving up. It was a little bit jagged. It did move up. It looked like it was going to be a good trade or a good trend rather. But look at price moving up there. And the entire time, the hourly Moxie indicator could not get over zero. In fact, it was starting from a dig that at this point, when price got over the 50, where was the Moxie indicator? It was very, very far below zero. And it was unlikely to really get over zero and go positive in any meaningful way by the time this thing got started. And so I look at this and say, hey, price was over the 50. The Moxie indicator was below zero this entire time. That's an inverse trampoline move. You better watch out because I feel like we're trying to go long at the 11th inning here and we're simply just late to the party. And so while you could be correct, you could actually make some money off of this to the long side, and it did move. You're kind of playing with fire. You're kind of coming in at the end of the party. You're coming in at the end of the run, and the Moxie indicator is the thing that's telling you that you should be watching out. And lo and behold, yesterday and today, there you go. We got that breakdown. And look at that Moxie indicator just roll over real hard. The other side of this that I could tell that these things were getting just too extended is on the weekly time frame. They're just getting, look at this. They're way outside of their weekly boundaries, especially up here. Way, way, way up there. So if we look at that with CF, that was definitely the clearest. If we look at Mosaic, this stuff was just getting super overbought. Look at this. It was just running these third ATRs on the weekly chart and on the daily chart, super high up here and really far away from any kind of support. And then on the hourly chart, look at this. Price kept going higher. The Moxie indicator kept going lower. Every time price went higher, it was doing it on less and less energy. And that's really what the Moxie indicator is trying to do and tell you and communicate to you, saying, hey, why is this thing going up? Or if it is going up, it keeps doing it on less energy. And at some point, that energy is going to run out. It's going to turn the other direction. And this was it. And you can see right there, there's their Moxie price trigger telling you that this thing was going to roll over. So that was Mosaic. And then NTR was another one. And as I said, these things really pushed for quite some time. But I was telling my subscribers that these things are out of my league. They are not doing what I expect them to do. They are super high up. They make me extremely nervous to go long on them because look at what they are doing on the weekly time frame. I mean, they are outside of their weekly boundaries. They're even so bullish. They are outside of they're not even touching the 8 EMA on the weekly time frame. Yeah, that's incredible. But at some point, the party's going to end. And what I can see here is that even though price got over the hourly 50, look how delayed the Moxie indicator was. This was price pulling the indicator. Basically, this was the tail wagging the dog. And this is something that, if you have the Moxie indicator and you look at something like this, you can start training your brain and your mind and your eyes for something like this and be able to see this. And this is why when any of my subscribers or any of the other people or traders that asked me about this, I said, honestly, it just feels really, really risky to be getting long at this point. That's what I've been saying for the last week and a half at least. And I said, by all means, go for it. If you can find a trend on a lower time frame, by all means, yes, there was a move. But for me and what I'm looking for, I'm coming in at the 11th inning on something like this, and it's too late. And you can see, we got price rolling over today. So that's what I've been talking about. Some caution on the ag and fertilizer names. Now, UNG, I mean, talking about being crazily overbought and all that kind of stuff. Yeah, UNG also up that alley. Now, I think we got into it. Gosh, we got into it right about here, about $17. So what is that? About 17 here. Just trying to eyeball it. And what I like to do is I trade the leverage ETF. So I was actually trading oil. So we got in there. I think we took a little bit off here. We took a little bit off here. And we got up to, I think it was 113% gain, 112% gain on Boyle since it's leveraged. This was an absolutely incredible move. And we took profits and we took profits. And then you can see here that this last move over just 2 days ago, 3 days ago, was kind of the blow off top. I mean, look at that thing. All the way up there by itself, out in outer space, too crazy. And that's your sign, that's your signal that, hey, this thing is just not going to last. And so, of course, it came back down. Now, from here, we have a very small piece because I do think this is going to go higher. The question is when. I think it needs to take a little bit of a break and chill out, pull back, go sideways, and then we're just going to have to see where it wants to go up again. And when it does, we can add back into it and add more to it. So we're just going to hang out with that one for now, but it's been a fantastic trade for us. USO, kind of similar. What I can say in through here is just like UNG, wild moves. At some point, they're going to just be too extended. They're going to come back down, and clearly you can see it pulled back. There was a bit of a triangle, and then it broke out. Cool. And you know what? That breakout got a little overextended, pulled back into support. Sure seems to me like this is going to keep going higher. It's just a matter of time. So give it a little bit of sideways movement before it starts going higher. The market's been under pressure, and I think these things are going to go higher. They just need to take their time. Same with UNG, same with wheat, some of these other commodities. Just give them some time, and they'll flag sideways into support and then keep looking to go up. So, all right. If anybody has any questions about, as I said, who I am, what I do, and what you like, then yeah, come over here to profitpilot.com and poke around. Feel free to check out any of the services that I offer. And if you like how I teach and how I look at the markets, then come on over to the trading room and we'll see you there. Thanks, guys. Talk to you later.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.